Good day, my name is Kmod. This presentation is a continuation of the income statement. For ease of reference, I'd like to refer to this presentation as Part 2. Part 1 tackled other items of the income statement that were basic, that is, those that didn't require any adjustments. In this part, which I'd like to call Part 2, it will specifically focus on items of the income statements that had adjustments. Without wasting your time, I'd like to show you the structure of the income statement or other amounts that we already concluded in the first presentation. As you can see, that's how the end product looks like. I don't even want to go to other items because they're specifically dealt with in the last presentation. In this presentation, I specifically want to look at items that contained complex calculations. The first item being under other income, and it relates to rent income. I quickly want us to go to the calculation of rent income. Before we even go to the calculation, I'd like us to go to the question paper so that you can see the information relating to rent income. As per the pre-adjusted trial balance, you are given the rent income of 37,200. If you look under the adjustments, wording highlighted in brown related to the adjustment that we need to take into account in calculating the final amount that resides in the income statement. I quickly want to read the information. It says the rent increased by 200 on 1 December 2015. The tenant has paid the rent until the end of March 2016. Remember, our year of assessment ends on the 29th of February 2016. However, it specifically mentioned that our tenant paid until March 2016, which actually makes it that rent to be rent for 13 months. However, as you would know, we want rent for 12 months only. Let's quickly go to the calculation slide and see how we determine the amount of 34,200. I'm just going to go to the calculation slide, calculation of rent income. Firstly, I'd like to start by establishing the current financial year. Our current financial year commences on the 1st of March 2015 and it ends on the 28th of February 2016, and that makes 12 months. However, in relation to rent received, it was specifically mentioned that the tenant paid until 31 March 2016, which makes it 13 months. And to put perspective, the tenant paid for the months between 1 March 2015 until 31 March 2016, which makes it 13 months. Moving along swiftly, we want to determine the rent received excluding the increment. The rent as per the trial balance was 37,200. Remember, that consists of 13 months, or that it represents 13 months. So we're going to deduct the increment so that we can determine the rent received for 13 months excluding the increment. We were specifically told that the increment came into effect on the 1st of December 2015 and it was 200 rents. So for the current financial year, we would have to deduct the 200 relating to January 2016, the 200 relating to February 2016, and the 200 relating to March 2016. Because remember, the 37,200 represents 13 months, and the 30 months includes the increment of 400, the increment of 800, which is a total sum of all those months. We're going to deduct it to arrive at rent received, excluding the increment. Our rent received, excluding the increment, came to 36,400. In this slide, we want to determine the monthly rental income. The purpose of determining the monthly rental income is so that we can determine the rental income that was paid for 12 months, which should be taken to the income statement. We're simply going to take the rent received as determined in the previous slide of 36,400. We're going to divide by 13 months. Remember, I need to emphasize because the tenant paid for 13 months. So we're going to divide by 13 months to establish the rental income, the monthly rental income. Our monthly rental income is 2,800. The next thing that we're going to do, we're going to determine the rent received that resides in the profit and loss. The rent received that resides in the profit and loss will be determined by taking the 2,800 monthly rental multiplied by 12. We're going to get 33,600. However, remember that December, January, and February increased by 200 rands, and it affects our current financial year. So in total, we're going to take the amount of 600 rands attributable to those months and add it to our rent income. The rental income to be taken to the income statement or profit and loss statement will be 34,200. I quickly want to show you how it's reflected. There you go. It's the rental income, 34,200. Remember, we already discussed the other items. Moving along swiftly, I'm going to go to operating expenses. We have discussed all those items. The items that we still need to discuss are the ones that had adjustments. Without wasting your time, I'd like to take you to the question paper. In the question paper, under the nominal section, we were told that we had stationery of 7,430. As a rule of thumb, the stationery will be treated as an expense. However, if there's any stationery on hand, the stationery on hand will be deducted from the stationery as per the pre-adjusted trial balance, and the remainder will be an amount of an expense that has to be taken to the income statement. Let's quickly go to the adjustment relating to stationery on hand. The wording in green relates to various types of stock. However, we want to focus on stationery. So we're specifically told that on the 29th of February 2016 at year end, we had stationery of 620 on hand. Let's go to the calculations. So if you go to the calculations, this is a simple calculation. We want to determine the amount that will be taken to the profit and loss. We're going to start with our stationery as per the trial balance. It was given under the nominal section. We're going to deduct the stationery on hand because we don't want to expense that amount, because that amount will be taken to stock. So when we determine stock that will be taken to the balance sheet, it will also consist of an amount of 620 relating to stationery on hand at year end. The amount that will be taken to the income statement or profit and loss will be 6,810 and is derived by taking the stationery as per the trial balance and deducting the stationery on hand. Let's quickly go to the income statement and see how it fits in. There you go. Stationery, 6,810. The next item I'd like us to handle is bad debts. Once more again, I quickly want to take you to the information so that you can get up an understanding of transactions that relates to bad debts. You had bad debts as per the trial balance. However, we need to take into account the adjusted information and see whether bad debts needs to be adjusted. The first transaction, that's the wording highlighted in orange, related to an insolvent debtor. We were specifically told that an insolvent debtor owed 580. The 35% was recovered. However, the remainder of the percentage will not be recovered by the partnership and it has to be treated as bad debts. Let's quickly go to the calculations. There you go, bad debts. That's the calculation. I clearly wanted to show you how the insolvent debtor estate is split in terms of percentage. The first percent, well, I'd like to emphasize that the total debt insolvent estate debtor, it's at 100%, and we've since established that only 35% will be recovered by the partnership. If you take the 100%, you less the 35% that will be recovered, the 65% is the amount that will not be recovered. The 65% relates to the bad debts. For you to calculate the bad debts attributable to the insolvent estate, you're going to take the total debt rent amount of 580 as provided by the adjustments. For you to determine the amount of bad debts arising from the insolvent estate, you're simply going to take your data, insolvent data, as given in the adjustments, and you're going to multiply by the percentage of 65. You're going to get an amount of 377. To get the bad debts that resides in the profit and loss, you're going to take the bad debts as per the tree-adjusted trial balance of 1,850, and you're going to add the bad debts that has been determined that is attributable to the insolvent estate. The total bad debts that has to be taken to the profit and loss, the income statement, is 3227. Let's quickly go to the income statement. There you go, 2377. Moving along swiftly, the next item we'd like to determine is the trading stock deficit. Before I even do the calculation, I quickly want to go to the pre-adjusted trial balance. You'll realize as per the nominal section, we were not specifically given the trading stock deficit. However, the trading stock deficit will arise if there's a difference between your trading inventory as provided under the balance sheet section and your physical stock count value as provided under the adjustments. Without wasting any time, I'd like to go to the calculations. Let's quickly go to the calculations. There we go. Firstly, we want to determine the trading stock prior to the physical stock count. What I mean exactly is that if you go to the question paper, you'll realize that in terms of the pre-adjusted trial balance under your balance sheet section, our starting value of trading stock was 71010. However, if you go to your adjustments, you'll realize that that adjustment in orange relates to a burglary. So we're going to work under the assumption that the burglary, which related to stock costing 24,000, has not been taken into account in that trading stock balance. So before we even look at the value of the physical stock count, we're going to take that 24,000 and we're going to deduct it from that value to reflect the value that was lost due to the burglary. I quickly want to take you to the calculations. So in this slide, I want to deal with trading stock prior to the physical stock count. I'm going to commence by taking the amount of trading stock as per the trial balance. I'm going to deduct the stock that was stolen during the burglary, and the cost price was given at 24,000. My trading stock value before the physical stock take was 47,010. As you can see, now we want to determine the trading stock deficit. You'll realize that the trading stock before the physical count, taking the adjustment relating to the burglary, was 4701. Subsequently, the partnership performed a physical stock count and they determined that stock is actually valued at 45,210. The difference between the two will result into a trading stock deficit. It makes sense, it has to be a deficit because prior to the stock count, the partnership was under the impression that its stock was valued at 47. But after they performed a physical stock take, they came to a value of 45. So essentially, their stock was overstated. Therefore, in order to reflect a correct amount of stock, we have to reduce it by the value of 1,800. The 1,800 will be taken to the income statement. There you go, trading stock deficit, 1,800 taken to the trading stock deficit. Please focus, we're almost there. The next item I'd like to tackle is the loss due to the burglary. Before we even go to the calculation, I'd like to take you to the transaction relating to the loss due to the burglary. Of course, it was not provided in the pre-adjusted trial balance under your nominal section. However, if you look at A transaction that's highlighted in orange, we just took that amount in determining the trading stock deficit. We're going to take the same transaction to determine the loss due to burglary. The partnership had insured its stock, it lost stock to the value of 24,000. But fortunately, due to the fact that it had insured its stock, it was able to recover 18,000 from the insurance company. So to calculate the loss due to burglary, we're going to take the proceeds of 18,000 and we're going to deduct the value of stock that we lost of 24,000. The difference between the two will be attributable to the loss due to burglary. I quickly want to take you to a calculation. There you go. Not as difficult, just simple. We're going to take the insurance proceeds. Remember, that's what we received. We're going to deduct the value of stock that was stolen. It's 24,000. So essentially, we didn't lose the entire 24,000 because at least we were able to recover 18,000. The difference between the two will be accounted for as a loss due to burglary. Remember, had we sold stock, let's say for argument's sake, we sold stock for 18,000, which cost us 24,000, that would result into a loss. But in this case, we didn't sell stock. It was disposed due to the fact that it was stolen. So we recovered the proceeds of 18,000. The difference between the two, it's a loss due to burglary. It's an income statement item. Let's quickly go to the income statement and see how it's reflected. There you go. It's a loss on burglary. The 6,000 is attributable to the loss as calculated. The last item I'd like us to tackle is the interest on loan. As you can see under the nominal section, nothing relates to the interest on loan. However, in order to calculate it, you're gonna have to apply the interest rate given to the capital portion of the loan. What you need to take into account is the fact that there was a repayment on 31 July 2015. I'd like to take you to the calculation. Let's quickly go to the calculation. So that calculation relates to the interest on loan. I'd quickly like to go through the breakdown before I do the actual calculation. So the loan relating to Corey as per the trial balance was given at 68,000. We're gonna add back the repayment because we want to establish what the loan amount was at the commencement of the current financial year. Remember, our current financial year commences on 1 March 2015. So between 1 March 2015 and 31 July 2015, the capital amount of loan was 73,000. So we need to determine the interest attributable to the period 1 March until 31 July 2015. So now we want to determine the interest on loan that will be taken to the profit and loss. It will be calculated by taking the 73,000, which was in existence from 1 March 2015 until July 2015, before the repayment of the 5,000. So we're going to take the 73,000 as determined in the previous slide, multiply by 12%. Remember, it was in existence as 73,000 for 5 months. Hence, we're going to take the 5 divided by 12 to establish the interest on loan on that capital portion. And subsequent to the repayment of 5,000, our capital portion was now 68,000. So the 68,000 multiplied by the interest rate, multiplied by the fact that it existed as 68,000 for 7 months in the current financial year, we obtain an amount of 4,760. In order to determine the interest on loan that will be taken to the profit or loss, that is the income statement, we're going to add the two amounts. And we come to an amount of 8,410. That's how it looks like. Remember, I've already discussed all other items of the income statement in part 1 of the income statement presentation. Thank you. If there are any questions, please feel free to contact me on my cell number, or you can post your questions to my email address. Thank you once more again.